Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Tesla report for Thursday, August 8th, 2024. But before we check out the charts, I just want to ask you to please click like, share, subscribe, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos, just like the daily Tesla and daily NVIDIA reports, daily analysis in the SPY, daily analysis in the Triple Q, weekly analysis in the S&P 500 index, the NASDAQ 100 index, and Apple stock, as well as 2 individual stock picks a week that you never see on YouTube that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor, always looking for 20% moves or more on those underlying stocks. And you get to see all of this for free. We offer a 5-day free trial up front. So check out wickedstocks.com. Let's take a look at the charts. I'll jump right to this weekly chart here just to show you that we are presently trading below the 199.74 descending one-year channel top that we settled above about 6 weeks ago. That threw off a long-term buy signal that is now, officially on the weekly chart, it is yet to be rejected. But I am going with the rejection intra-week, during the week, because of the settlement that occurred yesterday below a rising two-thirds speed line. That is now at 199 even. So we have yet to close below this rising, trend defining, I might add, rising two-thirds speed line until Wednesday. And Wednesday was a clear settlement below it. I am going with that sell signal. In other words, I'm not crazy about staying long, being long through the rest of the week, the next couple of days. I do think 181, 83 is in reach perhaps today. Nothing more than a simple trend line off of these highs. Goes back to May. That actually held on Monday, 181.83. I do see that by the end of next week, we can fall to 167.41, which is this double bottom that occurred May, June earlier this year. We could bottom out there for a day, maybe a week, but I do think as we continue really into, do we have it here today? We don't. My apology. Actually, we do. On the weekly chart, we've got 130.48. This is what I'm anticipating over the next couple of months, possibly by the end of September, 130.48. We don't have it drawn out on the week. Yes, we do. On the daily chart. There we are again. So this actually is the image that I want to show. The 198.53 is the descending channel top on the daily chart that we find at 199 and change on the weekly chart. And 199 even is the rising two-thirds speed line. It looks like a trend line off these lows. It does set up that way sometimes, mostly by coincidence, but it is a rising two-thirds speed line. In other words, I can tell you right now, the April low against the July high, two-thirds of the way back down, 66.6%, takes you right here in the time frame in which the July high was made. And so it's a trend line that projects off the April low at the 66.6% downside retracement in the time frame, the very day that the high was made in July. That becomes the rising two-thirds speed line. We close below it for the first time on Wednesday. That is a sell signal that I think is likely to yield the low 130s over the next couple of months. So, if you're playing the short side now, and that is the recommended course of action, whether that is, for the next day or two down to 181.83, or for the next week or two down to 167.31, 167.41, sorry, or as I say, over the next couple of months down to 130.18, that can be done a number of ways. You could reach for 130 strike out of the money puts that don't expire. I would go 4 months out on this 2-month likelihood. And you could also, if you're a near-term trader, you're playing the short side down to 181.83, 3 to 5 day swing traders, 1 to 2 week swing traders down to 167.41, etc., etc. All of this below 198.53 to 199 even. This is sellable resistance now. On an intraday basis, we might actually see 181.83 where profits can be taken. And if we close today below 181.83, we should tomorrow test 167.41. So whether it's 1 to 2 weeks or 1 to 2 days, we are expecting 167.41. And, if we were to close below 167.41, this level here, we're probably just 2 to 3 weeks away from reaching our now targeted 130.18 formation. This channel bottom goes back a full year now and can absorb selling on a quarterly basis through the rest of the year by that point in time that we would likely test it. Now, for the upside, we do have, of course, the 198.53 to 199 even region, the two-thirds speed line at 199 even. We also have this newly formed descending one-third speed line that we actually came close to testing on Wednesday. It was at 204 and changed. I bumped it up to a session containment level. So let me phrase it this way: if you're short now, you want to, and I'm talking, I don't care whether it's for the next 3 to 5 days or 3 to 5 weeks. If you're short now and we close above 201.16, I don't think you should be in that short position anymore. I think you should reverse and go long. 3 to 5 day, 1 to 2 week swing traders can anticipate the market pushing into this narrowing 225.11 to 236.02 region. You close above the descending one-third speed line. The rule of thumb is you can expect the descending two-third speed line. In other words, if we close above 201.16, what is now at 236.02 becomes a 1 to 2 week target. And then, of course, along the way, you've got 225.11 that is rising. This area all converges into a single point over the next 4 or 5 days. Closing above 201.16, we should push into this area by the end of next week or sooner. And we can top out at the 225.11 at 236.02 region, into later August. We can fall away from here. It would be a settlement, just giving you the heads up now, above 236.02 that would indicate a good August low and likely bullish continuation into September activity. I can see it right now. It'd be more like the 280s, a rising channel top that would be in the 280s and climbing if we were to close above 236.02, but we are a long way from that right now. On the way up, do I have any other levels to show? No, I think I pretty much, summarized it. Closing above 201.16, we have a good low for the week, and after yesterday's meaningful sell signal, we're right back in the saddle again in terms of expecting bullish continuation into next week, into this narrowing 225.11 to 236.02 region. But until then, holding below the 198.53 to 199 even region, we are going with the sell signal. And this sell signal expected to yield what is now 130.18 and dropping gradually over the next couple of months. On the way down, 180, 183, likely over the next day or two, possibly today, 167.41 over the next week or two, possibly tomorrow if we close today below 180, 183. I think that pretty much rounds it out. Please click like, share, subscribe. Check out wickedstocks.com. Check out everything we offer, especially, and I might add, the triple Q analysis, which has been, performing as expected. Doesn't always happen that way, but for the last month and a half, we topped out at a 5-year almost channel top. Once tested, we had mentioned how the longer-term support area that we tested this week in reach, we may see this area again today. Thursday, Triple Q is kind of setting up, I think, for a retest of this long-term support region, able to contain selling through the rest of the year. From here, we can round back up into the low 500 area. If we close below this zone on Friday, Triple Q sets off a long-term sell signal, and you can make yourself available to all that good information by going to wickedstocks.com and at least taking advantage of that 5-day free trial where you can see it all into next week. I'm going to leave it at that. I'll be back tomorrow, of course, with Friday's Tesla report. You have a great day.